Hey, welcome to this edition of the SA Crypto Market Analysis with myself, James Preston.
And myself, Graeme Tennant.
Welcome back, Graeme Tennant.
Thanks,
from the great yonder. You went to Europe and Canada. Was it a good trip?
It was a great trip with the family, and but good to be back in the office and in the swing of things.
Good to have you back. I am glad that you had a good break. You certainly deserved it. Unfortunately, we just couldn't get out a market analysis while he was away. He said he would try, but moving between the likes of Munich and Paris and Toronto, it's not that easy, especially when you have a little one as well.
The little one makes it challenging.
So welcome back. It's great to have you back. So guys, this episode is proudly brought to you by Altcoin Trader. You can visit them to add to your portfolio of coins directly from South African rands. Altcoin Trader, one word, .co.za. Very simple. And exciting news is that on Monday, the 5th of August, they launch live digital trading of gold and silver. Who right here, Graeme,
I like the sound of that.
You are indeed a gold bug and certainly a silver bug as well. So check them out from next week, Monday. They have fully backed gold and silver trading in digital format on altcointrader.co.za. Right, Graeme, let's get into it. Fortunately, not a lot has happened, or not a hell of a lot has happened while you were away.
Yeah.
What are we looking at now?
Cool. So look, fortunately, it wasn't a bad time to be away. Our last market update, which was some time ago now, I did feel that the market was getting a little bit too volatile for my liking and was going into a consolidation phase after we had this nice big run up all the way from the lows from around 3,000. And it was important that we had some kind of consolidation, which is healthy, and that appears to be the case. But now that we can analyze the price action over the short term, we can start to look at this period and see and make some analysis about where we think it's going from here. So firstly, I'll run you through the bearish observations. So the bearish observations say this orange triangle is our support level. And
orange rectangle
is our support zone, and it's not the cleanest support zone, but I do think it's worth noting.
I don't like correcting you, but I just thought, that's an obvious one. I thought I'd jump in there.
Nice one.
Also because I can't correct you on most occasions.
Cool. So what have we got here? We've got lower highs consistently. And that's a bad cross, but you get the idea.
Yeah.
And we're getting lower conviction off the support level, and at some stage there's a possibility that we dip through this, which could be fairly significant. And we've seen this movie before, not too long ago. But just on a bigger level. So that's potentially the bearish case. However, if I just clear this up, okay, and that's on this time frame, we could potentially draw a flag in here, which would look something like that, and that's a very healthy bullish continuation pattern. Okay, so if we zoom out, we say that's fine, it's consolidating in a flag, and we're waiting for it to break out to the upside. Even more interesting from a bullish perspective, if we zoom in a little bit closer, is this may not be a flag, but rather a falling wedge, which is bullish, and we can see that if we do that, if we go into the 4-hour chart, and we redraw this top line, we can see that it's actually potentially broken out of that channel. So that would be our falling wedge. And that's only recently happened in the last day or so.
Right.
And that's starting to look interesting. I have highlighted this 10,000 level as a significant area of resistance, which must be noted.
Yeah.
But I'm quite tempted to take a fairly low leveraged long trade, now that we've broken out of that structure to the upside. So, and again, as if you're accumulating as a long-term investor, I think nice levels to accumulate. Anything around 10,000 I think is fair. I mean, we peaked off at about 13,000 a month and a bit ago, and this is a nice retracement that you can buy into, and if we do dip down further, you just get a better entry level. So long-term investing, I think it's a nice time to start getting in, and this is starting to look interesting from a short-term trading bullish perspective as well. But we do need to be aware of that potential bear scenario as well. So those are the things I'm looking at right now.
So, I mean, I know we're actually out of time for this segment, but I'm going to push you anyway. You opened up with the bearish case, and now you're looking at the bullish case.
Yes.
What's your probability?
I'm 60-40 on the bullish side.
60-40.
Now that we've potentially broken off here, I am aware of this support zone, but now that we look like we're getting a little bit of momentum, we need to watch it. It's not clear at this point in time, but my bullish hat is on at the moment.
Okay, well there we go. Graeme, thanks so much. Now we're going to get into this week's question of the day, or rather question of the week. And each week we're going to take a question from the various community groups. So we've got SA Crypto Mining on WhatsApp, SA Crypto General Chat WhatsApp, and then of course SA Crypto Telegram Traders. This week comes from Mining, and it comes from Waz, who says, how will Ethereum's price be impacted by changing from proof of work to proof of stake? So Waz, what I've done is I've put together a little article for you. So I'm going to jump in here, Graeme. Is that all right?
Go for it.
I asked Graeme if he wanted to answer it, and he said, no, James, you can answer it. So I put together a little article for you, and I'm just going to run through a couple of points that I put together for you, Waz. So firstly, Vitalik was quoted as saying on Reddit that he saw 4 major hurdles ahead of the implementation. 1, lower than expected participation rates. 2, stake pooling becoming too popular. And 3, sharding turning out more technically complicated than expected. And 4, running nodes turning out to be more expensive than expected, leading to 1 and 2 anyway. So from my angle, an economics perspective, staking coins involves holding them as opposed to minting new ones, right? So that means in theory, there would be more ether bought up in order to create a validator node whereby one can stake. Obviously, the new coins minted as staking rewards would get sold on the market in order to cover the staker's costs. But then remember, those original ether coins bought being held creates a nice lockup of coins in the ecosystem. So potentially there could be a spike in price and then a stability as those coins don't get reflooded back into the market. But what we need to consider is how many ICOs are still holding an immense amount of ether, and are those tokens yet to be flooded onto the market, which affects the price anyway. But besides all that, Vitalik's points are intriguing and significant. The complications of moving to proof of stake are still immense, and the Ethereum Foundation haven't fully got their heads around how to implement it adequately as yet. And for me, unless they solve those problems, we won't properly see proof of stake rolled out and a full crossover from proof of work anyway for at least the next year or 2. So when we eventually do, I personally think the price will be much higher than it is now anyway, but of course that depends on how many ICOs sell off their ether between now and then.
Well, if we look at the ether price and how much pressure it's been under, I'd be surprised if many of those guys are still holding onto that ether. You think that would have released on the market, and that's been why ETH has been under so much pressure the last little while. But yeah, interesting, eh?
That's it, we're out of time. Waz, thanks so much for that question, we appreciate it. And don't forget to get your questions in. You can add it to the comments section. Of course, please subscribe to the YouTube channel. This episode proudly brought to you by Altcoin Trader. Gold and silver trading opens on Monday the 5th of August. altcointrader.co.za. Graeme, thank you so much.
Thanks, James.
We'll see you in the next episode.
Cheers.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.